Hi, Tom Leahy, Managing Partner at OptumEd. Welcome to our second installment of a series of videos regarding financial aid and how to pay for college. If you watched our first video, we dealt with sort of the current landscape, the cost of college, the trajectory of tuition and fees, and how the normal family, average family pays for college. In regards to different resources that they can tap into. And we also, real quickly, discussed the fact that there are two types of aid, um, merit and need. So we're going to, just to review, merit aid is fairly simple. It is based on the qualities of the student, the academic or otherwise, and what scholarship programs the school has to offer. And when the student applies to a specific college or university, not only are they looked at for to come there and attend, but also for financial assistance through merit offering. So that's merit. On the need side, it is all based on the family's financial circumstances, that of the parents and the student. At a high level, basically there is a formula that they use to determine what the family can fairly afford for 1 year's cost of education, now called the student aid index. And that magic number then, based on the family's income and assets and the student's income and assets, is compared to the cost of a particular school, tuition, fees, room and board. And if there's a difference, then there is financial need. For example, say the school costs $30,000 to attend, and the formula determines that the family can afford, the student aid index is 15,000. So the family can afford 15,000 a year, costs 30 to attend. So if the school accepts the student to attend, then they have to address that difference, that 15,000, and that is need that's been established, need-based eligibility for financial aid. And that's how it works at a high level. There's other things that are involved with outside sources of assistance and that sort of thing. But what you understand is that there's a formula that's used to determine what the family is supposed to be paying toward the cost, and the other is borne by the college if it is not equal to the cost or greater than the school's tuition, fees, room and board. So, as I was sort of implying before, now we see it in graph form, that student aid index is compared to the cost of school. Here it is visually. The light blue is the index number, the red bar is the cost of the school, and then obviously the difference then is the dark blue need eligibility that's established. So you can see that in the first instance, quite a bit of aid is established. Second one, not so much. The third, none. And point out, it's not, what's changing is not what the family pays, but the amount of need-based eligibility that's established based on the cost of the school. And just to give you an idea how the formula works, I said before, you look at parents' income and assets. There are some living allowances and tax exceptions and things that are allowed. There's a asset protection allowance as well that is applied, and then a percentage of that number is applied to the formula for the parent's contribution. And the same with the student. The first 6,000 and the student income is free. There is some, again, allowances for taxes. There's no allowance or any exception to the amount that is taken away from the student's assets in terms of the formula. So those four things come together to create that student aid index. And this is just, again, a simplistic view of how it works, but it gives you an idea that there's a lot of different elements that go into determining what the family's fair share is. And so, when you say, well, I don't, based on our income and assets, I don't think we're going to, receive any need-based assistance. You have to remember, all the different elements that go into the formula and the fact, the cost of the school. So yes, maybe if, you wouldn't establish need at a public school, but if you're looking at a larger private school that costs twice as much as that state school, there very well could be need established. So, there's reason to go ahead and go through the process of applying, as well as having access to federal loans, because without filing the forms, which we will talk about in a future video, you will not have access to student loans. Just to give you an idea of where the money comes from in terms of need-based financial assistance, you can see the majority of it are, is the form of loans. But, a small portion is in the form of outside money as well. So you see that the backbone of the federal program is really the Stafford loan, which we'll take a look at in a little more detail. So who controls the money? So good question. For need-based aid, that is administered through the financial aid office at the college or university. It is funding received from the federal state sources, and they use the FAFSA to distribute that money. Merit aid is administered by the admissions office, as we said before. In most cases, you looked at for entrance, but also for merit aid when you apply. This is money that the school owns, and you see up there in FAFSA and the CSS profile, two different ways of determining need, and we'll talk about that in a future video. So here are the federal programs real quickly. And again, these are all, for the most part, need driven. So you have to establish need, as we described earlier. Pell Grant, first year is $5,500. And that's the max per year. And you have to be below $23,000 in terms of annual income. The CEOG, Supplemental Education Opportunity Grant, is tacked onto the Pell Grant if more assistance is needed for low-income families. There's a work-study program. We've probably all heard of that. Again, if it's federally backed or state backed, then the student is assigned a job on campus for a certain number of hours a week. That money has to be earned before it is given to the student, put in his account, or handed to him in the form of a check. So again, depends on the school policy. Perkins loan is a low interest loan that families that establish deep need can access. And then, as I indicated before, the Stafford loan, that's the backbone of the federal program. There's a subsidized and unsubsidized loan. Subsidized, the government pays interest while the student's in school. Unsubsidized, the student is responsible. So the unsubsidized is not need driven. Any student can get an unsubsidized Stafford loan. The subsidized is need driven, and in most cases, when you get the Stafford loan, some percentage of it will be subsidized and some percent will be unsubsidized. But you can see the numbers there: $5,500 for the first year. Sophomores get $6,500 a year, and then juniors and seniors $7,500. So you can see, and this is between the student and Uncle Sam. It's a promissory note, so the student can take these out without mom and dad signing for them. So be conscious of that. And then there's a plus loan, which is the parent loan, which is credit based, and the parents can take up to qualified educational expenses based upon their credit worthiness. And of course, depending on the state you're in, there are state programs, for for residents of private and public school grants, scholarships, and the college administered grants and scholarships that they offer as well. So those are the sources, and then of course there'll be outside and private scholarships. When we talk about financial aid package, because once you applied and you've accepted, will then receive an offer of financial aid. School will come to you and say, okay, this is based upon the financial aid forms you submitted, this is what we can offer you. And the first level, depending on how much need you establish, we're going to offer you a loan first. That's Stafford loan in most cases. And then if there's more need on top of that, then they'll probably look at work study. And then we'll get to the stuff that we don't have to pay back, the grants and scholarships. And it all comes together then, and you can take a look at it. You don't have to accept any of it. You can accept part of it. But once you've done that and then submitted it, then you know exactly what kind of help you're going to be getting from the school that you're attending. And again, just to give you an idea how visually how things might look in terms of, again, driven by the cost of the school. The more the school costs, the more grant money you stand to receive after they've gone through the Stafford loan and the federal work study. So here's an example of two colleges where you end up getting more grant money, though it costs more to go there. But again, your need-based eligibility has to be addressed. Here's to schools here in Virginia, just to give you an idea of what you need to be looking at. And just because you establish need doesn't mean that the school can cover 100% of that need. And so you need to understand that there is information available out there as far as what percentage of that need the school has historically covered. So it's really important to know that, because you're expecting to have $15,000 covered in our earlier example. You establish 15,000 in need-based eligibility, but schools only cover 50% of it. You're only going to get 7,500. So not only are you going to be asked to pay what the formula says that you can afford, but you're going to have to cover that additional 7,500 as well. So it's really important as you're looking at schools, and if cost is an issue, to really see how the schools have performed in terms of distributing aid. Well, thank you very much. If you have any questions, you can email us at ask@optumedcenter.com or call us at 804-417-4807. And we'll see you on the next video.